Let's also talk about Hindalco because, you do have the third quarter reflecting resilient India operations by and large. What's really standing out to me is that sharp reported profit also dropping. Looks like the Oswego fire impact here.
The one-time big impact has definitely had an impact on net profits, but also in the key takeaways, right? The India performance continues to offset the global volatility, but just the sheer size of the global aspect of almost 2 times the India business shows you that the bigger impact has had on the profits. The other key aspect of the record India business, that continues to be the key focus, and favorable macro conditions are boosting that. But the Oswego plant was impacted and reported a one-time loss impact in this particular quarter. Novelis has, the per ton EBITDA has improved 6%, but largely not enough to, help the global business of the company, while the resources security efficiency as well as has boosted the margins, which are in the upstream margins specifically. Now, revenue, the basic numbers was, up 0.7% quarter on quarter, but the EBITDA was down almost 10% on a similar basis, and net profit was down 56%. To at almost 2,000 odd crores. There was a one-time impact of almost 2,600 crores of the Oswego plant and the fire there, and hence these numbers. I also want to just highlight finally, before looking at the brokerages as well, because the debt has been increased materially in this particular quarter by almost 18,000 crores. So now the net debt to EBITDA ratio stands at 1.73, and some more comments on this will be something to watch when we speak to the management today. Couple of brokerages like Citi have actually downgraded the stock. So Citi downgrade to a neutral from a buy. They have hiked the target price to 1,000 rupees though, but they continue to maintain that they see leverage concerns and also the pending insurance amount as a key concern for them. The cash flow impact is also higher than what they had anticipated, and hence this particular downgrade. And HSBC as well, they maintained the buy, but cut the target price to 1,210 rupees per share. And they've consistently said that while the growth was strong in the domestic business, the Oswego exceptional event, investors should actually look through it. So it's actually an interesting take coming in from HSBC, where they see that this was a one-time event that's done. Look through it. We'll wait for the pending insurance money to come in. And the underlying earnings also expect to be robust. They've also specifically mentioned that the large net debt increase is partly driven by the higher working capital in India. So largely HSBC being a little bullish compared to Citi. But this could be another key stock in focus today. We saw that 6% reaction a couple of weeks ago. So definitely watch out for this one.